What's going on, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to do some stock analysis for Nike stock because the stock is up. It was up close to 11% pre-market. Now it's only up a little bit over 6%. And that is because yesterday they reported earnings and they beat on not revenue, but they beat on EPS because they came out with 94 cents a share versus the 75 cents that was expected. Revenue was pretty much in line. It was a very slight miss, but not by much, 12.9 billion. And then the net income was 1.4 billion for the quarter compared with 1.4 billion in the year prior. So pretty much flat. But the investors are definitely liking it because the profitability is going up. So I have been talking about Nike stock for a couple of weeks now. I've been making videos on it because I've been buying it up around $100 a share. And I think that this is a good time to get in. So I'm pretty happy with this. I think Nike stock has some ways to go. And I think we can see this get back up to a $130, $140 stock. So the first thing we're going to look at here is their revenue chart. And what we're going to see is that revenue last year was about $51 billion. And in the last 5 years, they are growing revenue at about 7% per year. So nothing crazy, but still good. Net income was $5 billion last year. This chart is not as nice as the revenue chart because it's not as consistent and the growth is not there as much. Even though in the last 5 years it says average growth 21% per year, that's really just because of these giant jumps they had in 2019 and 2021. But really, I would like to see net income be a little bit stronger and be able to stay above the $6 billion mark. So let's hope they can do that. Then we're going to look at their valuation, and we are looking at a P ratio right now of about 27 times trailing earnings, not forward, but trailing, 27, 28 times, which is not the cheapest it's been, but definitely not the most expensive it's been, because for the longest time here, it traded anywhere from like a 19 all the way up to a 30. So I would say this is like, and then since then, after 2018, it went as high as 61 and 73, and it's the new baseline has kind of been around this 30 mark. So this 27 mark is like not really cheap, but it's not really expensive. And you have to also factor in that on a forward basis, their earnings are expected to go up, and so that should also push the stock price up. If we look at this year, we're looking at $3.69 of EPS, and then next year, $4.34. So that should be another driver for the stock. Then we're going to get into the innovation. I would say yes, not only of what they're doing now, but really just Nike as a company, its whole story, like from the Michael Jordan era, is they kind of have just been one of the innovators in the space. So I would say they've done a good job with that. The market share is hard to find, but from what I've seen, it's anywhere from 27 to 38%, which either way, those are both really strong numbers. So there's no issue there. Return on invested capital is good. However, it doesn't have the best trend. If we look at their ROI, we're going to see that it's in the most recent year, it's 17%, which is good. That's better than a lot of companies, but it's not as good as it was 5 or 10 years ago. It was as high as 28%. And since then, it's kind of just been declining year by year. So it's not a good trend, but it still is a healthy number. So that's why I gave that a check. Then we're going to take a look at their equity. And what we're going to see is the equity is growing. If we look at its numbers from 2019, we're going to see that the equity was about $8 billion, and now it's about 14. So it's nearly doubled in the last 3 years. So that's good. That'll get a check. Is it over 15% of the market cap? No, unfortunately not, because Nike's market cap is about $145 billion, which is pretty rich. So the $14 billion is not going to cut it. The share count decrease, yes, pretty much buying back 1% of shares per year. So that's good. The assets are not 2x the liabilities. The profit margin is, I'm pretty sure it's exactly 10%. So that will get a check. Cash and receivables is more than the average annual income by about 3 times, because they're doing 5 or 6 billion of net income in a year. And their cash and receivables is right around $15 billion. So that's good. The dividend is also healthy. Not only do we have a consistent growth trend here of about 12% per year in dividend growth, but more importantly, the payout ratio is 41%, and that is a healthy number. Is the company over 10 years old? Definitely. And how is their free cash flow looking? Free cash flow is similar to net income, where it could be better because the trend is not super consistent. But overall, I would say it's good because there's at least several years of improvement. Here's the regular free cash flow, and here is the adjusted free cash flow for stock-based compensation. So last year they did $4.1 billion of free cash flow. And again, it's a similar number to what they were doing almost a decade ago in 2015. And then you have several years of it declining, then it starts to come back, then it declines again because of the pandemic. Then they have a big comeback year, then it declines again. So it keeps going back and forth. It would be nice to see some consistency. That's the only thing that I'm missing from this company. But other than that, I mean, it's still Nike. It's still, one of the most famous brands on the planet. And that's why I don't think there's definitely less risk with this one. So that's why I'm bullish on Nike going forward. And that is my stock analysis. Thank you for watching. I will see you in the next video.